biggest scam on the planet. Agents screw you over. Whole life has high fees and commissions. The insurance companies take all of your cash value when you die. Buy term, invest the difference, because no one should ever get whole life insurance. The rate of return is 1%. It is the worst investment on the planet. It's extremely expensive. Stay away.
According to an investigation by correspondent David Evans, published in this month's Bloomberg Markets magazine, many life insurance beneficiaries whose claims are denied never see a dime.
It's an absolute emotional roller coaster.
Right now, I need to talk about something that's really pissed me off, and that's life insurance.
How did we get to a place where the world hates whole life insurance? Are all the negative things people say true? Is there validity? And if so, why would anyone sell it? Are life insurance companies and agents just crooks and frauds and have no moral compass? Well, let's explore why and how we got to a place where people think whole life should burn and the people who sell it should burn with it.
Why should I bother with life insurance? I'm single.
To start off, in 1583, the first official recorded insurance policy was created. Over time, this phenomenon of whole life insurance developed, and it became a strategy that was there for more than just protection in case of death. It also helped subsidize families' retirements. Currently to this day, there are two types of whole life policies, one with dividends and one without. Insurance companies either sell one or the other. So early on, whole life insurance companies were at war with each other, battling for the market share. Up until roughly the 1980s, whole life with dividends was advertised as more expensive, but was created to eventually provide more cash for retirement. While whole life with no dividends, the sales pitch was, it's cheaper, so you have more money to invest the difference to outperform your whole life with dividends. So it kind of resembled the whole buy term and invest the difference model today. As the craze of the rising interest rate environment occurred, so did the company's dividend rates, which then forced the whole life with no dividends to come out with new series every few months to try and appear competitive. This caused the death of whole life with no dividends. You will rarely see a whole life policy with dividends, still active in today's day, which gave whole life a negative reputation. Right around this time, a couple different financial products surfaced. Then came a new insurance product as the insurance companies tried to gain more market share. From 1980 to 1990, universal life insurance became the craze, which provided double-digit interest crediting. During this 10-year window between universal life and the 401k, they made whole life pretty less prevalent. In 1982, a law called the TEFRA, the Tax Equity and Fiscal Responsibility Act, came out with the agenda of trying to close any tax loopholes, which made investors question putting money into life insurance. This started the revolution of investors investing in the market and shifting even more money into the 401k and buying term insurance as the market rates were in the upwards of 10 to 12%, which is where buy term and invest the difference was officially created. To add more salt to the wound, in 1988, the IRS created a law that limited the amount of money you could store into the life insurance contract before it no longer was looked at as a life insurance contract and was considered an investment, which made it less enticing for investors to invest money into insurance. In the 1990s, the interest rate environment started to decline, causing the magical universal life insurance contract from the 1980s to the 1990s that was providing such high returns to start a massive turn of events for the insurance industry. As the policies were not fully funded, causing people's hard-earned money to eventually evaporate, and it gave the insurance industry a bad rap for permanent policies.
Life insurance, the older you get, it costs more to cover you.
So to overcome this battle, the insurance industry started pushing another product called variable universal life to help with the problem to compete with the market. This had its own issues, causing more policies to lapse and people to lose their hard-earned money. Then the insurance industry did it again to overcome the already lost 2 decades of products not ending with the best result for the clients. They created what was called an IUL, Index Universal Life Product, which was created to provide upside potential with no downside risk. Early on in the life of an IUL, there were many lawsuits and the product had its own issues. But on a side note, over time, the UL, VUL, and IUL have improved tremendously. The industry just had to slay a few dragons to get closer to the princess. Every dragon fought, people got hurt, but the industry was forced by the law and the market share to get better. Around the same time, IULs became popular and the beautiful world of the internet became more prevalent. You officially had a platform for any person to share what they wanted, when they wanted, and however they wanted, without any repercussions. And as the legend has it, a man named Dave Ramsey started his YouTube channel in 2009.
Somebody please smack me.
So it was the perfect storm for the industry. You had the insurance industry trying to find their way, promoting, building, and falling at a rapid pace to find successful products for the consumer. And the rise of the internet financial gurus became a thing. And who took the bulk of the wrath? Well, you guessed it, Whole Life. And here's why. Once social media became a place for promoting, the world of pyramid scheme financial services, better known as multi-level marketers, became prevalent. They then surfaced like the rise of the phoenix and ran wild promoting their products, suited for their agenda and bashing everything else in their way. Prime America shouted, "Buy term, invest the difference," as they were soldiers of Dave Ramsey. You had the likes of WFG and PHP promoting IUL. So who was there to promote Whole Life? Well, there wasn't anyone. The only people who weren't advocates were the people who weren't on social media. What I mean by that is big banks, corporations, politicians. These people were the quiet money. It resembled the quote, "Wealth is quiet, rich is loud, and the poor is flashy." As the internet promotion got bigger, it wasn't just IUL and buy term and invest the difference advocates. Whole Life promoters, specifically infinite bankers, found their voice. Through it became a constant war, constant battle between the ignorant fighting for their side, being loud and flashy. So I've realized over time, Winston Churchill said it best: never engage in a battle of wits with the unarmed man. So again, why does the world hate Whole Life? Because it's at war. It is at war against all other financial services. It is at war against financial advisors who promote the market. It is at war against insurance agents who sell term. It is at war against IUL agents. It is at war against the financial gurus. It is at war against the uneducated, the arrogant, and the greedy. But you know who it is also at war with? Believe it or not, it is at war with itself. It is at war with the Whole Life agent who sells it. I'm not ignorant enough to think it is all sunshine and rainbows on the side of the Mississippi, and Whole Life deserves the praise and the glory as the best thing since sliced bread. Whole Life agents have created their own demise by doing what their adversaries do: bash the world if they don't believe in what they believe, causing bigger reactions. Even I am a culprit of this from time to time, mainly with Dave Ramsey and the 401ks. But come on, can you blame me?
It is what it is.
It is what it is. But the problem isn't having an opinion. The problem is we aren't open-minded enough to realize not one size fits all. Some financial products are better for some, and others, they're better for others. But the real demise is the way Whole Life agents educate on the internet. We talk philosophy and use the words infinite banking, bank on yourself, and even the end asset. But if it's not explained how Whole Life works and it functions, it's useless. Because of this, it gets classified as an investment by its adversaries. People have to go to war because if they don't, they feel they won't be able to feed their families. The hunt is to destroy all others so I can feed my family without realizing that the world is abundant and there's enough food for everyone to feast on. Lastly, the downfall of Whole Life is agents are selling it for one thing when their clients want something else. This happens because agents are incentivized by commissions and not by the best interest of the client. The industry is set up that way. In insurance, you can design a product to increase one's commissions that is just factual. Everyone has their own opinion on it, but in a world where it already gets labeled as high commissions, my encouragement would be for the industry not to do so unless it is in the rare instance it is actually more benefited for the client. So again, let me ask, why does the world hate Whole Life? Well, simply the industry did it to themselves. So the question is the world correct? Is it a scam? Do frauds sell it? Is the industry greedy? Are there high commissions? Well, only if it was simple as yes or no. But as evidence shows itself, the answer is yes. These are all true. But then again, we have to ask ourselves, compared to what? Because I can pick any industry: medical, sports, law enforcement, education, financial, insurance. There are bad apples that make it hard for the good apples in every industry. I've heard it at least once across the board in my 30 years of life. Someone in almost every industry gets called a fraud, a scam, a con artist. Maybe it is because we are human. So I believe the world hates whole life, rightfully so, but I also believe whole life, when understood, used in the right context for the right person, and designed in a way that helps the individual get what they want, is a phenomenal tool. So I ask you to be open-minded and do your research, because that is what the wise would do. As Albert Einstein once said, the measure of intelligence is the ability to change, and to change, we have to be open-minded. Another wise man once said, ignorance is always afraid of change. A person only hears what they understand. If you agree or disagree with what I say, that is completely fine. Just remember, don't shoot the messenger. I'm here to share why the world hates whole life. I am not whole life. I have a family just like you.